Welcome to Trade Talks by Exness, where traders trade insights one conversation at a time. I'm Jack, and today I have with me Coach Miranda and Kuyang G. Welcome to the podcast. Today we're going to be talking about trading strategy. So first, Coach Miranda, please introduce yourself and tell us a little bit about your trading background.
Sure. So my name is Coach Miranda, and I've been trading for around 9 years. I love to trade cryptocurrency and stocks. I've developed the system. Me as a trader myself, I've developed the system, and I was able to teach that and make people understand that for them to be able to win in the stock market and cryptocurrency. So
Awesome. We'll dive into that a bit further.
sure.
How about you, Kuyang G?
Hi, I'm Koenji. I started in the stock market way back 2007, and I have a community that I teach how to trade the markets the simplest way possible. So I tried to teach them that they can really follow a system that's very simple.
Awesome. So we're going to get right into the first topic, which is how did you discover your unique trading style? It sounds like you both have slightly different approaches. So how did you go about discovering it?
So way back around 2006, sorry, 2016 rather, I did obviously try to understand what a basic support and resistance is. I did technical analysis, and obviously marrying that with the fundamentals. So fast forward 2 years after me doing a lot of tests on my system, I was able to develop a system called Halmachi, which is obviously a scalping method, which allows me to be able to scalp different types of assets, primarily on cryptocurrency. I did backtest that many times. I've tried it on less liquid and liquid assets, and most recently I've tried that in cryptocurrency, where there's obviously a lot of liquidity and volatility. I've seen that it can work. On any types of market, be it on a downward trend, upward trend, or even a consolidating market. So, with a lot of backtesting and marrying that with fundamentals, I got a certification on being a certified technical analyst, and it allows me to further drill down on checking any other permutations in my system. And one thing that I've discovered is that it's actually working on different types of assets, and I'm very, very happy about that.
Fascinating. So it sounds like you used your corporate experience and
Mhm.
prior knowledge and brought that over to trading. And then it was a
Mhm.
sort of a trial and error approach to
Yes.
find what works in a scientific manner.
Mhm.
Great. How about you, Kuyang G? Tell us the history of your trading strategy and how you got to where you are.
Yeah, I started in the stock market where usual price swings usually range between 1 to 2%,
Mhm.
and uh, as time passed by, I realized that the best strategy for me is to just buy and hold the stocks. And then I transitioned to cryptocurrencies where there is a lot of volatility.
Mhm.
So there's a discrepancy from where I came from to where I am now. So for that, I used a lot of risk management. And because I'm using leverage as well right now, but still, I'm still at that point that I realized that the basic things like support and resistance, your
Mhm.
trend lines are still the profitable way for me. So I back tested a lot of system back in the days, but here I am now. I'm using those basic stuff again.
So maybe sometimes people overcomplicate
That's
their
true.
trading strategy and it's best to master the basics.
That's true.
Awesome. So how do you go about mixing fundamental and technical analysis? Do you just use one or the other or do you use both?
I use both to my advantage, so because you have to have this skill set in technical analysis
Mhm.
for you to understand where the market's going to go, but still you need to understand what's happening really in the economy, especially if you're trading volatile instruments like cryptocurrencies and gold. So you really have to monitor what's happening, and by combining both of them, so you get to develop a system where it will allow you to plan your trades in advance instead of just waiting for the news to come out. So being a proactive uh, trader would be an advantage instead of just waiting for the news and just reacting on whatever the price is
Right. So
doing.
be proactive, not reactive,
That's
right?
true.
Excellent. How about you, Coach Miranda? What's the mix of technical and fundamental?
Yeah. So, I always say this to my students. So I always say SNR is king, which is support and resistance. Oscillator is queen, but volume is a kingmaker. So I would say volume is driven obviously by fundamentals, news, rumor, etc. So what I do first is obviously from a market structure perspective, I would like to use what I call a naked charting approach, where I use basic SNR or support and resistance to be able to see if the price, for example, is within a symmetrical triangle and it's about to break out. For me, what can potentially drive it and have a momentum to break out could be potential good news, or a potential good bias. So I use technical analysis as my first step to understand where can the price go, and use volume speculation, rumor, or market sentiment as my potential volume maker. Therefore, I can understand if the market can, break out with momentum. So I would obviously ride that trend, or if it's going to go down with a
Mhm.
negative news or a rumor and stuff like that. So it's a marriage of both.
Great. You touched on it a bit then, but I want to understand a little bit more about how you might adapt your trading strategies to different market
Mhm.
conditions. And maybe you can give us an example of a specific case where you did that.
Sure. So let's say, for example, one alternative coin in cryptocurrency, which is a current news. So this was retesting a multi-year resistance. The resistance goes way all the way back April of 2021. A retest happened of July 2023 and July 2024, and most recently in September there was a multiple retest on that resistance. So I was mentioning to my community, the market is trying to retest that particular price, but we're seeing a lot of rejection, and we're waiting for a news to come out, particularly on a judicial decision about that particular asset, on whether SEC will appeal for that particular case or not. And true enough, the news came out 2 days ago, that SEC made an appeal about that particular decision, and it created a drawdown on the price. So if the community did a long on a derivative trade for that particular position, and they didn't anticipate that there's going to be a potential news coming out, particularly on that legal decision, then they might get wiped out, especially if they get all in, right? So that's perfect example of them obviously being guided that, hey, you know what, we need to be mindful that there could be some potential drivers on the
Mhm.
price. And one thing on that particular asset is that it already broke out on the multi-year resistance. So everyone was like, okay, you know what, it's probably going to be going, on a momentum already. It's going to be creating higher highs, and that impulse will go even higher. But then again, there was a correction on that Fibonacci 382, and then it further went on a correction mode just because of that news coming
Mhm.
out. So I would say, yeah, I think it's one of the perfect example for my community, where you just don't want to assume that just because it broke out on the resistance, the market will just all ride into that trend. We still need to be cognizant of those potential news that can affect the price of a particular asset.
Excellent. And again, it's important to highlight the importance of understanding the fundamentals
Yes,
alongside the technical,
right,
because they can impact each other.
sure.
So, Kuyangji, how does your strategy adapt to different market conditions? Do the basics still apply all the time, or do you need to be adaptable?
Yeah, in the market that's rapidly changing, we really need to be adaptable with
Mhm.
these changes. No, so when I transitioned from stock market to cryptocurrency, which is a highly volatile asset, now I'm trading gold, which is more stable and less volatile than cryptocurrencies.
Yep.
No, so I trade both of these assets in the Exness platform. So when there's high impact news incoming, which is very accessible, this news in the web terminal. So I am cautious on which positions I'm going to take,
Mhm.
or I'm not going to trade at all. If that news is something that I'm not sure whether if it's positive or negative impact to the asset that I'm going to trade, uh, probably I will not trade that asset. So I learned over the years that for a successful trade doesn't always mean executing trades. Sometimes the best decision is not to be in the market or even cutting losses early
Right.
when the market moves against us.
Patience and risk management.
That's true.
Great. So the next thing I'm interested in is how do you guys assess whether your strategy is successful? How do you know if it's working? How do you know if you should stick with it? And how do you know maybe you're becoming complacent and you need to change? What do you think?
There's a lot of things to consider for us to be called a successful trader. So some are using risk, their wins to losses ratio. So you can do that by analyzing your past trades. You can write it on your journal, etc. No, so you can do things like that. Uh, some are like myself. No, I check my portfolio not on a daily basis, but on a monthly, quarterly to yearly basis. No, so that's how I measure my success as a trader. So I'm more focused on the longer term perspective rather than trade by trade
Hmm.
system. So that gives me uh, more more space to some, because sometimes we make losses as a trader. So it doesn't matter for me how many losses I make, as long as those winning trades are going to wipe off all those losses.
Great. So to wrap it up, if to sum up the
Sure.
conversation, let's give the viewers your one top tip when it comes to refining their trading strategy. What tip would you give them?
So, I always mention this to my students, right? So, trading and a successful trader, being a successful trader is a process of transferring assets from an impatient to a patient trader. So, when do you assess that it's time for you to change your strategy? Is obviously it's all gonna be going down to your wins, and it should translate into something that you can measure. I say to my student, what gets measured gets done. You need to metricize and you need to metricize the behaviors and the actions and the decisions that you do in the industry. At the end of the day, in what I do in my career, in my role, it's not just passion. It's not just profit as another P, passion, profit, but it's also the purpose.
Mm,
The purpose is to be able to solve problems. And I think it's important as a trader to be able to solve problems in either way. It's either, from a behavior standpoint, it's either on your wins, it's either in your, approaching of the market, etc. So, end of the day, what I can tell you is that if it's addressing your three P's, is this something that it's helping you? Is it part of your passion? Is it something that's solving problems for you? And the other, which is profit, is it something that can be useful for you as a trader? Then you assess it from there.
very
That's one
inspiring.
thing I could give. Yeah.
Very good. Kuyang Ji, what's the final word to the viewers?
To be a successful trader, one must continue to learn and continuously learn and adapt with the ever changing market. So basically, those systems that we are currently using right now might not be effective tomorrow. So it's really continuous learning and enhancing one's approach to be a successful trader, and do not focus too much on the short-term volatility. You focus on building your portfolio in the long term, so that you can focus on things that matter more than just trading.
And if
Excellent.
I can just add,
Sure.
don't forget to have fun, right?
Yeah.
We're all doing this not because you need to, don't get old
Yeah,
early. And,
that's true.
winning is nothing if you don't have fun. At the end of the day,
Yeah,
we
yeah,
need to have fun in what we do. We need
that's
to
true.
love what we do.
Love it. That's a great reminder and a good way to wrap up the conversation. So thank you both for joining me
Thanks,
today.
Jack.
That was Trade Talks with Exness. Thank you and goodbye.
Thanks, Jack.
Thank you. Thank
Bye.
you.